I think it's important to take stock today of like things like risk management and how to manage a portfolio, which is not easy and there's no easy answers for any of it. I talked to a guy many years ago. He was an investor of mine. I would say still a friend. Guy named Bob Johnson. He was one of the top guys for George Soros. It was him, Stan Druckenmiller, Soros, and a pretty small group of other guys that planned out a lot of these trades. And Soros famously said around the time of the pound trade, where they shorted a lot of pound, Soros looked at the trade and he said, I think the suggestion was to do a smaller amount that they were planning than they ended up doing. That was the plan. And Soros said, no, we have to go for the jugular. And, they were willing to violate risk management principles for that. I think that the secret to trading is knowing not so much when to violate risk management principles because you just shouldn't do that, period. But I think that it's about trying to be patient and constructing a trade where you have a defined loss. And with options, you do get the ability to have a defined loss. And you realistically say, okay, look, I might take this defined loss, and then what I'll do is I'll take this next defined loss, and then finally, this is how many defined losses I'm willing to take before I give up. So how do you short a stock that goes from 10 to 200 and back down to 10? You're sure it's overvalued, but you don't know when the roller coaster is going to stop. You don't know when the train's going to, derail. And when it comes to a company that's fraudulent, which none of these quantum companies really are, but when you short a fraudulent company where they're actually breaking the law, and I don't mean the kind of law Trump or I broke, but like a real law, where they're actually criminally doing something wrong, you're shorting the stock and you're saying, Jesus Christ, these guys are willing to break the law. And the stock keeps going up because they're lying. What are you supposed to do? You're going to be right, but you don't get right and you don't get paid until you close the trade or your P&L is up. So, when the Kelly criterion says that that it's actually mathematically proven to maximize your bankroll or your portfolio size, your P&L, you're supposed to put the most amount of money in your highest conviction trades. But if you actually employ the Kelly criteria, most people in Wall Street, the Kelly criterion, most people in Wall Street find that it leads to positions that are too large. Yeah, James got it. It's a pretty simple probability, and so for determining bet size. Now the thing about options is they allow you to construct interesting bet sizes. So I use the method of synthetic puts to make a healthy P&L. I'm up a lot today. James made a good point here, which is like multiple outcomes and risk reward have to be implemented within Kelly, which makes it hard to implement. But in any event, if you can find a way that's creative that can limit your risk, I think that's one of the keys here. And I think the other key thing is if you're willing to take pain on the way up, you should be willing to be greedy on the way down. And that's one of the hardest lessons I've had to learn. I was very good at taking pain on shorting, and as a long too. Really, really good at it. The thing I wasn't so good at is when I finally start to get paid, I would get out of my whole position like right away. And my trading partner,
Order filled.
my business partner, Mark, he would laugh at me and he'd say, so you're willing to ride the stock as a short from 5 to 40. And the second it goes from 40 to 35, you want out. If you're short it all the way up there because you thought it was going to go from 5 to 1, if anything, you should be adding to it because the market's finally starting to see what you see. You see things early because that's what your gift is. But, the rest of the world's going to have to wait to catch up to you because you're just a different kind of cat. And you'll see things before other people see them, which is good, but it's also bad if you are trying to, trade the stock market, because the stock market measures your P&L as of right now, not as of when you're going to be right in 3 months or when you're going to be right in 6 months. So if somebody who doesn't know how to spell quantum wants to buy these stocks and a group of people want to do that and make it go to 20, they can put you out of business before you have a chance to be right. So now that these stocks have made their parabola, it's very unlikely that they'll come back. So like once a parabola, a good example is this stock, this is D-Wave. D-Wave has been this like kind of worthless company for, I want to say 25 years. So I was following these guys a long time ago. I love science. I love all of STEM, medicine, you name it. You guys know that. And D-Wave's been around a long time. D-Wave was the first company to ever say the words quantum computing. And I was a young guy on Wall Street, surrounded by a lot of tech people. And my brain, my imagination would always run to these quantum computers and think, wow, well, what if this could happen? Because it was this sort of science fiction thing. It wasn't really a science fiction thing. It was sort of this thing you'd see in science papers and things like that, journals, from time to time. And so I'd always pay attention to D-Wave. And I even wanted to invest in D-Wave privately. But over time, I learned that they weren't really a quantum computing company. They're what's called a quantum annealer. And annealing doesn't really do anything. And so they've had 25 years to sell annealers. I think they made their first annealer like 15 years ago. And nobody buys them. Google was an early investor and customer, but they basically divorced many, like 10 years ago, severed ties. And you can't use these annealers to do anything useful. And I don't think you're going to use quantum computers to do anything useful. I think integer factorization will be solved. But I think we'll be long gone from integer factorization by then. In fact, NSA has already set deadlines to move government information off of quantum, off of sort of integer factorization, I guess RSA and ECC type encryption to something more secure. So, China may be able to read our emails in 2040 that we sent in 2020, but they won't really care that much. Nobody would really care. The same way, if you read the Kennedy files, you sort of look at it and say, wow, this was secret information, but I'm not sure why and who really gives a shit. Go ahead and read the Kennedy files. They're really boring. There's nothing in there. I read the stuff they just declassified, and presumably the stuff they just declassified has to be somewhat sensitive because they waited this long to declassify it. It's not interesting at all. So most of these communications that we want to decrypt are just not that exciting to decrypt, and we'll change the encryption protocols anyway. In 30 years, these companies won't be around. It's like saying 30 years ago, the biggest drug companies are going to be, there was a bunch of weird drug companies way back when that you probably wouldn't have heard of, but like, I don't know, Warner Lambert or, some of the companies that ended up merging a million times over to become these big companies. And it's laughable to sort of go back in time and say some random biotech company like Sugen or Centocor, or I'm only naming some of the successful ones, but some of the ones that there were 100 unsuccessful ones for the ones that were successful, and say, oh, but that's going to be the future Amgen or the future Intel. That's like what you're trying to do with IonQ we're getting now. Yeah, quantum computing is going to take 15 to 30 years, like Jensen said, but by the time that happens, these companies will be out of business, merged. There'll be 3 recessions. Nobody knows if these guys will survive till then. It's not even clear IBM or Google will survive till then. So Google might just say, you know what? Quantum was really Eric Schmidt's thing. We're going to cut this because it's just too expensive. There's no point. This should be done by a privately held company. This should be done by a venture capital-backed company. That's not our job at Google. Our job is to focus on our products. And they just kill quantum because what's the point? It can't help Google. There's nothing really to do with Google. It was just a science experiment that Larry, Sergey, and what I heard is Eric mostly liked. In fact, I'm not even sure Eric or Larry cared for it. But when you manage a $1 trillion company, you're allowed to have little things like that you do for fun. But it doesn't mean that it necessarily makes sense. Bezos was willing to lose billions of dollars a year on Echo and Alexa, and those products don't do shit for Amazon. But he really liked the idea of having them, and they were willing to lose a lot of money just to have those. So, IonQ almost went bankrupt. As did Rigetti. When they were privately held, they couldn't find any more capital. They had to do down rounds. And then when they were done doing down rounds, they had to do a SPAC. Nobody wants their products. They have very few customers. The only thing IonQ has is an Air Force contract. The Air Force isn't exactly the most venerable, amazing sort of office you can think of. And given IonQ's lack of progress, I'm not sure they're going to renew those contracts. They're pretty small to begin with. So I'm very suspicious of all of this stuff. There's better quantum companies anyway that are private, like Quantinuum, or PsiQuantum. And what's funny about looking at these quantum companies is that they're the only ones in the menu. So I was trying to find a good analogy for this, but I was too tired and bored to bother. But basically, it's like having, a shit sandwich and a douche. What is that shit sandwich? A douche and a giant douche on the menu. There's a South Park episode, I think. And they say the waiter brings you the thing and he says, "Do you want a shit sandwich or a giant douche?" And the average retail investor says, "I'll take the shit sandwich." And the other retail investor says, "I'll have the giant douche." But all you have to do is say, well, why are these two on the menu? What else is on the menu? Oh, well, we got this, filet mignon, and we got this. You didn't ask about those. Well, that's the thing. I mean, the only two publicly traded quantum companies are Rigetti and IonQ, really. And so retail investors, when they want to buy quantum, that's the only two they can go to. But they're cockroaches. The good companies are IBM and Google, which don't have material businesses that would change their stock price, or Quantinuum, which is private, or PsiQuantum, which is private, or a couple of these other companies. So you're forced to buy the lowest quality companies, and now you're a bag holder. D-Wave and like QUBT and PsiQuantum and Quantum Corp, like these are all, Quantum Computing Inc., like these are all like just scams. Those are all zeros. But like to even humor Rigetti and IonQ, which I'm not sure we should do, but even humoring those companies, those are like very third-tier companies, let alone investable or exciting companies. So anyway, that's the spiel with quantum. I think it was more of a story about risk management and tolerating a short that's ripping in your face, and shorting after it starts ripping in your face. So here's Rigetti, right? It feels like some big victory today, but it's not. If you look at the stock price, I was shorting at 13. This stock is going to go back to 3. Once a parabola goes up like that and breaks, it doesn't get better. It doesn't recover. So this is the time to short it, when it's safer. I'd rather make 13 to 5 free money than struggle on the way up to 20. Now, I'm not the kind of guy that is willing to do that. I'm willing to be a little early. But the reality is you should wait for the break. The break has happened, right? And now you pound it and short it. You're still going to make 80, 90%. I'm going to make 80, 90%, but I'm going to make it with all the stress and pain and difficulty. So Santa is, it certainly looks like they cured type 1 in one patient. And there's other companies doing this kind of stuff. But yeah, I mean, it's exciting, and I'm usually a skeptic, as you guys know. But the thing about this is, like, if you just buy stocks, if you just short stocks, you never buy anything, you're just short beta. So you have to be able to, or let's say if I bought Pfizer and Merck and some, Home Depot and some really safe stocks, like at the end of the day, like I'm just shorting beta. So you have to pair. That's why I mentioned being long Palantir, pairing the risk factors. So if you're long momentum factor or short momentum factor, and we've been short momentum factor in all kinds of stocks and even crypto, then you have to be long some momentum factor, or you're just like, you can replicate this portfolio by just shorting like half these stocks here, or just Bitcoin, or whatever's been up a lot. You could just short that, and you're not even getting the alpha from quantum computing.